Hey traders, Raghee here. Let's get a quick audio and video check in for our charts and coffee session. Should be good to go. Good to see everybody. All right. Excellent. Hey there, gang. Yeah, I had to move the mic down. Let's see. There we go. All right, gang. Happy Tuesday. Good to see you all. Welcome to Charts and Coffee. I'm Raghee Horner. If this is your first episode of Charts and Coffee, where we talk about charts and drink copious amounts of coffee. I just brewed this one. This is a Kona Pea Berry from Volcanica. Black Friday, they have really, really good sales, and I always end up stocking up. So doing a little Kona Pea Berry. Good stuff. All right, gang. Hey there. All right, let's get to it, shall we? So I'm going to dive right into the charts here. All right, let's do this. There we go. All right, so I'm going to dive right into the charts here. Good morning. Good morning. Great to see you all. All right, let's do this. Let's do this. You know, this week is an interesting one because we're getting the sort of the finality of the election results. That's always going to be pretty positive for the market. So we're always looking at price action as it leapfrogs from narrative to narrative. What do I mean by that? What I mean by that is the market's always looking ahead. It's a discounting mechanism. If you don't know that, you do now. What does that even mean? The market's really seldom interested in what's happening now unless it's a data release or earnings or something like that we could not have fully discounted, or it's looking at what the next narrative is. The next narrative is stimulus. The next narrative is, well, stimulus is a narrative that doesn't have a particular date assigned to it. We know it's coming. But the other one is the Fed on Wednesday. So let's jump into the calendar here a moment as we take a look at the markets rebounding from yesterday's bit of weakness. Please keep in mind that on the daily time frames, gang, now clearly your experience of the market is very much going to be influenced by the time frame you're watching. So when I'm on FinTwit or I'm looking at other traders' analysis, they may tell me the symbol, they may tell me what kind of trader they are, macro, technical, whatever. But if they don't tell me the time frame that they're looking at, I know nothing about what they're trying to communicate to me. So whenever we're talking about the market, whenever you're explaining the market to somewhere else, to someone else, even to yourself, be very rooted in the time frame that you're looking at. So I'm looking at the daily time frame, which isn't always the one that's going to be most tradable, but it is going to be the one that is always the most psychologically relevant. End of day or daily time frame chart. So keep that in mind. When I talk about the trend, the overall dominant trend, I'm talking about the daily time frame. So you'll take a look here. We're rebounding, but notice that even on the correction, this is the NASDAQ on the daily, we barely reached the 21 exponential moving average. Gang, that has to be considered a pretty shallow retracement. So what is the 21 moving average, exponential, simple, whatever variation you like to play around with? What is it saying? It's looking back 21 periods. In the case of a daily, it's 21 trading session closes. And then it's saying this is the average. So we have barely even returned to an average of the last 21 days. That's shallow. And we've touched it a few times on pullback. So I would say going forward, I'd be open to aggressive entries from that level. Now, then the next question comes up which is the narrative. Narratives oftentimes, gang, are the reason for the correction. Narratives oftentimes are the catalyst for when we could do something, okay? So keep that in mind. What could, I just see here, Mike mentioned I made a grid for stay-at-home stocks. I love that. So Mike, you put together a bunch of work from home, stay-at-home stocks. And then what do you know about those stocks? You know that certain narratives are going to propel them higher and certain narratives are going to make them retrace, right? You know the narrative that's going to make them move. So I love that. And I think as long as you keep that in mind, you're in really, really good shape. I like it. I like the focus. Excellent. So Pablo asks, do I have the wave labels available for TradingView? So Pablo, we don't have an indicator in the free indicator section of TradingView. I do have a specific indicator that I use on TradingView, but that one we don't have in the TradingView indicator. I don't want to call it a store, but whatever that collection is that's built into TradingView, we don't have one there. No, not for TradingView. We have a slightly more limited Pine Editor scripts, a little bit less, but let me mention this, Pablo. The main indicators that are absolutely and have been a staple of my trading, in some cases for decades and others for about 5 years now, would be things like the wave and grab, which I created for myself early on in my career, the propulsion dots, and the Darvis. Darvis dates back to the mid 1950s, and all we did was automate it and give it a slight twist in the Darvis 2.0 indicator. So that's the foundation. If you have those four on your chart, you have the tools that I use to make the majority of my decisions for any market that I trade. So I think you're in good shape there. As far as the different labels, gang, there's a number of tools that I use that are available free on platforms. Yeah. And so most of them, it's going to be Wave, Grab, Darvis, and Propulsion. Now, I will say there's a number of tools that I support for our members because it needs some explanation, things like that. And a lot of the tools are freely available to Simpler Futures members as well. And I can see many of you here in the room are. So while a lot of my tools have been and available and always will be freely available, there are a number of tools that are just behind the member paywall. So straight up, I'm not going to tell you guys otherwise and have you looking for something fruitlessly. Okay, so when the wave switches from double green to green with a yellow, what does that indicate? So I love it, Nick. So what happens if and when this second label, which measures the 34 EMA, goes yellow? Nick, what that means is that the market has lost that really good uptrending organization. So you can see we have really good uptrending organization in a number of markets. So let's kind of go backwards to a recent transition to a green from yellow and look at the way in which the market behaves when the wave label is yellow. So let me show you here. All right, so take a look at the space between, here, let me grab my handy dandy drawing tool. Take a look at the space between here and here on this is the daily time frame of crude. It's a continuous contract. See all this is yellow all through here. Take a look at the way the market behaved through this area. Then recently, we've gone green and look at the way it's behaving. Okay, now that's the difference between a market that's in chop and a market that's now in an uptrend. So you can sort of reverse engineer that. Let's go back a little further. Through summer, we were trading crude oil to a high degree of success because there you go. Look at all that green there. And then here, look how we went to yellow, right through here, right through here. Notice how the higher highs, right? The higher highs and the higher lows that we saw, which is the backbone of an uptrend, by the way, gang. I know higher highs get the attention, but it's actually the higher lows within the context of an uptrend that keep it intact, that keep it tradable, that keep it profitable for most traders who are willing to buy the dip, or even traders who are taking volume confirm breakout to the upside. Both of those work fantastically well in a double green. But look how when we transitioned right in there, notice that stopped working. That's the transition in the trend. So Nick, that's what happens. That's what it indicates. Stop assuming higher highs, stop assuming higher lows, stop trend following the market, and think a little bit more in the light of, hey, how would I how would I look at the market if it were chopping? Okay, so I hope that makes sense. All right, so do we have any gap plays? Yeah, let's go back and take a look at our broader averages. Okay, gap plays are going to be the culmination of a market that's opening this morning at 9:30, where we're above both the 4 p.m. high and yesterday's regular trading hour high. Now, sometimes, gang, and I'll admit, I don't get that specific. You can, admittedly, you probably should. But what I'll do, and I'm on Thinkorswim charts right now, what I'll do is I'll take a look at the high, which was 12,550, 1249 and a half. And you can see currently we're trading at 12,560. Is that a gap? Yes. Is it a huge gap? No, it's not a huge gap, but it is meeting that dual criteria gap where, again, above yesterday's 4 p.m. close and ideally above the regular trading hour high. So strictly speaking, yes, it's a gap, but I'd like to see it as clearly above the high from yesterday as possible. Is there a gap on the S&P? No gap psychology on the S&P today. We also don't have gap psychology on the YM today, and we don't have gap psychology, or do we? No, we don't, on the Russell. So only the Nas Tech, right? What is the NASDAQ? It's XLK in terms of the ETF. It's XLK, it's XLC, and it's XLY. Tech, communications, and discretionary. Those, we might be better off. When I see that one market is marginally gapping higher, and I do mean marginally, and I see the other three are kind of stuck in the range from the prior day, two things are going to happen today, gang, and I have those written in my journal. And it's the same thing. I don't, generally speaking, want to be short in front of the Federal Reserve. Really in front of any Jerome Powell event, Kapowell, as we call him in the futures room. I don't want to be short into the event. After the event, it's a whole other story. Typically what happens after a Federal Reserve event is we'll see that sell-off. So that small gap on the NQ, I think what's going to make a whole lot more sense today, and this is something I'll be doing in the futures room this morning when I do, today on Tuesdays and Thursdays, I do the chat live. So I'm on the mic and we're trading live in the futures room. And I'll give you guys a little bit of insight. Something I'm going to do today is going to be a little bit more granular on the XL, C, K, and Y. And perhaps in lieu of trading the broader average, I'm going to think about trading maybe an individual sector or individual outperforming stocks within them. So that will be part of the scan today. It will definitely be part of the scan. So Glenn, yes, I think there's maybe a minor gap to be seen in the NAS. Quite frankly, I really was looking to get opportunistic on lower lows. If there's anything that I wanted to see today was a little bit more weakness in front of Friday. But we've got the Federal Reserve. Let's talk about the Federal Reserve here for a moment, gang, because this is going to matter. And it's going to matter for those of you that have been trading the dollar, as I have, and currencies that are relating to the dollar. Remember that we're going to get guidance from the Federal Reserve on Wednesday about their bond buying program. And I don't know if there's any questions about the Federal Reserve or not. But one of the things that the market is bracing for is a potential letdown as the Federal Reserve may not sound as accommodative as stock traders would want them to be. Now, remember, the FOMC or the Federal Reserve is buying some $80 billion of treasuries. So what has that done? It's sent the bond prices, bond yields, well, what was their point of doing that? To keep yields lower. If yields are lower, what does it do? Well, it pushes traders into stocks. It pushes traders into corporate bonds, right? So if the yield on treasuries continues to move lower, what it does is it pushes them into other places. So the Fed buying the treasuries increasing their balance sheet, we saw the V bottom in the balance sheet last August, is very, very good for stocks. So if the Federal Reserve isn't going to be as hyper accommodative as they are right now, if the stock market participants don't see the Federal Reserve on the same charge, looking ahead, continuing to buy those treasuries, that could create a pullback in equities. Do I think it undoes the dollar weakness? No. Do I think it undoes the strength in stonks? No, I think it might just give us the correction that we've been waiting for. So if you are looking for a correction, look, I know we've been trading through pit bull lows and electoral college uncertainty, and then waiting on stimulus. And then now I'm saying, hey, we got the Federal Reserve at 2 p.m. tomorrow, and that could create some volatility. Just keep that in mind. If you're going to buy, just remember you're going to have to sort of navigate through the volatility tomorrow, potentially. Okay. All right. So let's see what else we have here. Let's see. Gold. Chris, I'm not trading gold right now. I'm not really actively trading gold until it establishes a clear chop. It's up, but please remember this. Don't get too individual candle focused unless you're day trading. If you're day trading, that's an interesting candle. If you're trading on the end of day time frame, that is not an interesting candle, right? So you might say, okay, Rag, well then what's an interesting candle? It's not the candle itself or even the size of the candle. It's where the candle is occurring. Is it happening at the top edge or bottom edge of that range, right? So if you like this individual candle, which I don't blame you, it's an interesting one for sure, shorten the time frame, play it today, because it's a today candle. It's not a longer term clarity candle. Longer term clarity is going to come as we're trading up towards 1880 or down towards, say, 1765 on GC. All right. So yeah, I'm not super interested in gold at the moment. Okay. Just not super interested. All right. Let's see what else we have here. Based on yesterday's market action, do I still think the YM will be weaker? I know that I just talked about what some of the narratives would be to give, lend some volatility to the market. Look, the YM right now is not an inside day, but I can hardly call this a really strong candle. It's above yesterday's close, but I'll day trade this market. I'll stay nimble, and I'll remain mostly bullish until 2:30, 3 o'clock tomorrow. And at that point, what I'd like to do, because I did not get those lower lows today, what I'd like to do then is see if the Federal Reserve can give the market, it's typical, it's traditional, buy the rumors, sell the news post Federal Reserve. And I think that could be a terrific opportunity. So keep that in mind. Loving the XLC right now. I'm with you. I think there's some interesting movement. Google's been very strong. Facebook has been very strong. So when you take a look at the guts of the XLC, Google's really been doing most of the heavy lifting. But overall, a really good proxy for Google and Facebook, mostly for Google because it's so expensive to trade, would be trading the communications ETF. Yeah, so I'm with you there. Will I be broadcasting in sector secrets? No, my friend. Some of the things that I do are day trading in the futures room, and some of them are separate to sector secrets. And so, no, I will not be broadcasting there, my friend. Although I do broadcast in sector secrets on Mondays and Fridays when we do our end of day watch list building session, which is really what's most valuable to the folks there. Hawaiian Peaberry. Yeah, Alex. Yeah, I'm doing that Kona. I love it. It's really, really good. It's really good. Okay. And on that note, gang, it's 20 after 9. I got to get over to the futures room and do some day trading. We could do some Forex in the future. Sure. Maybe on Friday. Hey there, Mike. How are you? Maybe on Friday, hit me up, or even Thursday. Let's see what kind of movement the dollar has after the Federal Reserve on Wednesday. So that might be a really, really good one. All right, gang. Thank you as always for joining me. That 20 minutes just flies on by. I hope that gives you guys, at least if nothing else, some timing for your plans For your long positions, use the Federal Reserve volatility, gang. And if you are going to step in before that, perhaps maybe with half your budget, half your position size, so that if you get more opportunity, you can deploy that capital when we see that the typical tendency of buy in front of the Fed and then sell off after occurs. So, be opportunistic, keep an eye out for that pitch. And if we see it, we're going to swing away. All right. Okay, gang, have a great one. And I'll see you tomorrow. Be good to each other.